You scrutinize the hard numbers every quarter. Listen carefully to every word the management utters. But do you know what really makes the leadership of these companies you invest in tick? Well, I'm Anuradha SenGupta. This is Life After Listing, and we are going to go beyond the numbers. Today, I'm getting you the story of Happiest Minds. Happiest Minds is headquartered in the IT capital of the country. Now, unlike other parts of India, which are reeling under this severe heat wave, in Bengaluru, it's green, it's lush, and the weather is really quite lovely thanks to the unseasonal bouts of rain that the city is experiencing. And I'm here in this beautiful place to try and catch Venkat. Because you know they say the early bird catches the worm. Venkat, so lovely to see you.
Very lovely to see you as well.
This is such a lovely place.
I know.
Did I disturb
Welcome to
your
Bangalore.
reverie?
No, not
your
really.
Early morning musings?
Not really.
Not really.
Have a seat.
Any conversation with somebody, and that person who's leading Happiest Minds, has to be with what makes you happy.
The answer to that has been consistent.
Which is?
A job well done.
A job well done.
That's what makes me really happy.
You said you start your day very early. The fact that you have to work across time zones, post-COVID and lockdown and work from home, work has seeped into almost 24 hours of the human day, isn't it? What do you make of that, and what is the impact that has had on you and also the nature of the organization and its culture?
2 years back when COVID started, we were kind of proud to say that we could start working from home within 24 hours of the lockdown or even before the lockdown. At that point in time, that step looked difficult. But now in the last 2 years and now, what we are seeing is, like you said, it's intermingled so nicely, work and home, that people have got used to it. So now the challenge seems to be to get people back to work. As you must have read, we are now trying to get them back to work. We are trying to make the workplace a lot more interesting. Because in the long term, you have to work from office is what we believe. People would like to now take a lot more time off from office setting and work from home. But what we have seen is productivity, the
has
ability.
Been impacted.
I wouldn't say has been impacted drastically, but it is likely to get impacted because we work in teams.
Yeah.
When you work in teams, it's all about the interpersonal aspects of meeting with people, having meetings in the office, talking about problems, issues, and projects in the office. All of that really makes a difference. But we could build in some bit of flexibility within that, given that people are now used to it. So that's what we are now trying to do.
And IT companies, there seems to be this very, very big challenge of maybe people working, moonlighting, working across projects. Is that something that is a big problem?
It is a problem. Did come up during the early period of the work from home.
Yeah.
But most of the companies have figured ways and means to work around that and figure out if there is some bit of moonlighting. And it's been kept under wraps. I don't want to call it a well-kept secret within the industry, but people have managed to work around that and have fixed checks and balances to stop that. Even we had our own slight small run-ins, but we have been able to fix it.
It's also a generational thing, isn't it? The younger people and people coming into the business, the mindset to work, Venkat, is very different from when you started or when I started, right? And also in your sector, given this talent crunch that you're facing and this huge competition for good talent, are they calling the shots?
I wouldn't want to say that they're calling the shots. It's more collaborative. Right now, when we get into hiring, we set out the standards and we say that this is what we would like to do in the medium to long term. And it's a collaborative exercise. Hiring has become a collaborative exercise. And also the generation, like you said, there's
Yeah.
a social media generation,
Yeah.
and people are used to 140 characters to voice out their opinions. Yeah, so to that extent, I think we have to change our hiring patterns, our hiring practices according to the needs of the day, and which is what I think our teams are doing today.
Do a little bit of flashback and talk about 2 years ago when you all took Happiest Minds public. What was that pivot like to go from being a private company to being a public one? And what have the last 2 years been like?
When Ashok, he set up the company,
Yeah.
his vision was to always go public,
Yeah.
and we had set a timeline for that as well.
Yeah.
And we did go public within that timeline. So having set up a company with the intention to go public, from day one, we had designed all processes, systems internally, and were preparing to be a public company.
Yeah.
Ashok, for him, this is a third public company.
Right.
For me, this is a second. And most of the other people in the management have been part of public companies. People say that life changes once you become public.
Doesn't it?
There is a part of it which changes. That's there. But largely, with respect to governance controls, we have taken money from investors from day one.
Right.
Employees have been our investors.
Yeah.
We call them Happiest Minds. We don't call them employees.
Yeah.
They have put in their hard-earned money into the company. So for me, color of money is green. It's the same wherever it comes from. And my fiduciary responsibility
don't change whether it's a private company
or a public company. Retail investor today is very, very knowledgeable. In fact, we are happy to have close to 7 lakh retail investors. So this number was 150,000 when we went public, and today it's 7 lakhs.
In 2 years.
In 2 years. So the kind of depth of investor interest, the retail investor interest has been quite mind-boggling, is what I can say. There are influencers today who really make it so easy for the investors to understand. So I put out all these quarterly numbers, tabular forms, and I put out these numbers. But let me tell you, I myself, in the evening, go check out these social media influencers and what they have to tell about our company and the performance. So you have the analysts, they're all for the buy side, sell side, hold.
You're on hold right now. People are holding on to Happiest Minds, right? And the target is plus 1,200
or something. Yeah. So, while not commenting on the price, you have the analysts who really cater to the SUAV, the institutional investor. And for the retail investor, you have these influencers who really break down the financials. In fact, I take a few messages from these influencers on communication, how to make sure that my results reach out to the public, the retail investors.
Have you got used to living quarter to quarter, which is what going public makes you do, isn't it?
We don't get too carried away by the quarter, and we make sure that we deliver good results, and we have done our job well, communicate, and that's about it. Never lose sight of the medium to the long term. So if you have seen, we have not been giving guidance. We have not been talking about what will be my growth for the next year, how's my next quarter looking like. We talk about the markets, we talk about the depth of the markets, the demand in the market, and then leave it at that, and also explain the current results. Here I would like to just give you a little bit of a aside. So we had a vision statement for the first 10 years, then we had for the next 10 years.
So you started in 2011, isn't
2011.
it?
So that was there till 2021. And it nicely coincided with we going public, and we came up with a vision for the next 10 years.
The new vision statement,
One of the key vision statements is designing the company for perpetuity. So if you look at it—
What does that mean?
That means the company has to stay. It has to go on forever. In legal terms, the company is a persona. It has its own life. It's born when it's incorporated, and it has its life. It has to live beyond its promoters. It has to live beyond its management, and it has to continue to create value for its shareholders, investors, and all of them. So which is why it's very important to create and design a company to last in perpetuity.
How do you do that?
You have to create a value system. So that's the fundamental, the value system, the basic theme of the company. And that's something that we have, I believe we have done well, and it has to continue. Second is the ownership pattern. Ashok owns 50+%, and from his own learnings from running listed company, last one being Mindtree, and you know where it is gone right now. He has also designed the legal structure in a manner which makes sure that his holdings do not get diluted beyond a point, such that there is any threat to the company.
So it will stay on the path and the vision that you all are outlining today.
That's the whole idea.
You mentioned Mindtree. We know that Mindtree and L&T Infotech have just merged. This kind of consolidation, do you see that as a sort of trend in this business, and how does that impact the competitive environment for jobs, deals, contracts, more clients?
Consolidation is a part of the growth cycle of a company. If the owners or the promoters or the larger shareholders decide that the time has to come that they want to merge, like I said earlier, it happens and mergers happen.
Sure.
So it's driven by, I would say, commercial considerations at some level. So that's what we want to stay away from. We have created a brand. We have created a persona which will stand on its own foot and merits and grow. And along with it, we take our investors, shareholders, and create value for them. You must have heard of stories of in the past Wipro shareholders, HUL shareholders who have held on and they have got their children married, they have sent their kids overseas for education. That's the kind of value that those companies created over the last 20, 30 years. We would like to also be a part of that story.
That's the peer group you want to belong to?
At least from the standpoint of creating value.
Do you see more consolidation in the sector though? What's your sense? Because there are such strong tailwinds, right, for the IT sector. What are some of the big things you see play out in the sector in a macro sense?
Consolidation will happen. There will be people who want to move away, sell out and move away. I'm not differentiating between listed companies and unlisted companies, but players, industry participants will look at consolidation, and that's par for course. Now, if you look at a recent report, McKinsey report, they talked about the industry going from 200 billion to 350 billion in 5 years, give or take another 2 years. So it's still rapid growth, driven by digital and the whole move to digital. So you have the traditional IT and the digital IT. Everybody is moving to digital IT. This whole transition that's happening to moving to digital will require a lot more supply, investments, capabilities. And so there is that market demand like you referred to earlier. So there is place for, I think, all players. And if people like us who have started about 10 years back and now created a strong franchise, I see a good road for us ahead, at least from the growth and from the ability to deliver and make money.
I was reading some NASSCOM quote which said that there's a 21% gap between demand and supply where talent is concerned. Is that the biggest challenge, or are there other things that we're not able to see?
The challenge right now, here and now, is the talent crunch. You're seeing it, and that's because of this sudden cutover. Whenever there is such a transition which is so rapid, especially when it got accelerated because of COVID, you run into trouble. But people talk about India's demographic dividend. I'm just going to refer to India right now because we are largely delivering services from India. So the demographic dividend, I believe, will come into play, and there will be huge amount of talent that will get pushed into where the demand is. And demand is obviously digital. So you now hear finishing schools, you hear final year students taking on courses to get themselves more digital friendly. They're learning a lot more in the last year of their campus. So it's only time before this talent will get backfilled, but it will take time. So within that, I would say 1 or 2 years, you will have this talent crunch. Overall, industry also, if it cools off, I'm talking about the. I'm not just talking about the digital IT industry, but the IT industry. It's got other constituents as well. If that cools off, I'm sure people will slowly gravitate towards the digital part of the IT. he'll get retrained. So there is a huge amount of backfill that's going to happen. I may be proved wrong, but I see this attrition problem picking up for maybe a quarter and then it plateauing and then like everything else, tip down.
Are there new things that you need to do to get more talent into the system faster, quicker, and perhaps more able to get started, you know?
Here the answer would depend on the industry or the kind of work that we do. For the kind of work we do, we need digital capable people. So traditionally it's an engineer plus, but there are aspects and parts of it where you can get maybe a person who's a pure science graduate. You can put him through training. If there is people with both attitude and aptitude, obviously they can get trained. I'm not saying that they have to be necessarily engineers, but the need of the hour is to get that finishing school, that finishing training to get into the newer digital capabilities.
Venkat, give me a sense of how a company like yours anticipates the future. We are starting to hear companies talk about metaverse, Web 3.0, people are trading in cryptocurrencies, the government is, government and regulators having to react and be ready to protect people from all these new innovations, disruptions, and technological advances. How does a company like yours anticipate change, and what are you doing on these fronts?
So we have a very strong CTO organization. So that is the Chief Technology Officer of the company. And he has his arms into all the new technologies that we are talking about. Second aspect is we have something called Centers of Excellence. So we have currently 4 of them: security, analytics, process automation, and IoT. What happens is the new age technologies get incubated within this, and then you take these proof of concepts to the customers, and then you make it into productionized offerings to customers. So the CTO office and the COEs, they work hand in hand to figure out what is a new age technology and how can you take it to customers to make it available to them as a service. But here lies a small risk as well. You'll see that there are a lot of new technologies that people are talking about. AR, VR, being a media industry, you must have heard a lot of them. But you really need use cases that you can take to the customers. Let's talk about cryptocurrency. People are talking about cryptocurrency, Bitcoin, all of this, but the use case has not really gone beyond the Bitcoin as of now. But really, you need to get use cases which you can take to enterprises, which they can roll into their own business to make sense.
Metaverse, Web 3.0, what are you all doing, and how do you gauge what potential this has for your customers?
So we start with making ahead of time investments. Today you see the press agog with news items saying this company is investing X million dollars in Web 3.0.
Yes.
Not that we want to keep up with the Jonases, but we are also doing similar things. We are making investments into Web 3.0. A new area is low code. That's something where we are investing in. Process automation, robotic process automation, artificial intelligence based solutions. One area which we really picked up ahead of time was on drones. So you must have read about how we are helping the Indian government do the digital sky platform, where there is going to be a unified platform to track and trace all drones in this country. We are playing a very significant role in building that platform. So that way, that is a technology that we adopted earlier, and we could quickly take it to the market. And also now the proof is in the delivery that we have done on Digital Sky, and from there, a few other projects. Similar to that, AR and VR, we've been talking about it. We have taken a couple of them to our customers, and we are working closely with them. Web 3.0 is in its early stage. So right now, we call it investment stage. So we are making investments.
I'm guessing a large part of your role is to anticipate and be ready for the future. I mean, COVID was such a massive disruption, and it didn't come from, it was not a technological disruption. It was a virus that brought the globe to a halt. So how, as a leader, what is it that you are having to, what are your sources of information? What are you looking at? How are you processing to prepare yourself for disruption?
Disruption is on 2 fronts. One is on the technology front, and the other is on the business, finance, and related
Sure.
aspects. Today, predicting profitability, because the question that I get during these quarterly calls that we talked about is, Venkat, what's the sustainable margins? I used to give a number. For the past 5-6 quarters, we have beaten those numbers. I went back and I realized that the mechanism to predict profitability or growth right now, it's a lot more complex than what it was earlier.
What was it earlier and what is it now?
Earlier, you had signed large $1 million contracts, so you knew for the next 5 years, people used to talk about predictability, predictability. I'm just voicing what somebody else said in the industry. You knew that. But in the digital environment, predictability is there. But you know, the components of that are changing. For example, if I sign on a $5 million or $10 million, let's say a long-term contract, I only know what I can deliver in the next 6 months to 12 months. Because after that, there is so much of technology disruption. Do you want to lock yourself in for such a long term? So these are questions that are beginning to now surface.
Interesting.
On top of that, you've got exchange fluctuation. You're seeing how the rupee is moving. Attrition, which is moving, today it's high double digits that we're talking about. You've got the war, COVID. So looking at the moving parts, it's becoming as complicated as weather forecasting. That's what I like to call it right now. Profitability and revenue forecasting is becoming very complex. Despite that, given all our understanding of the business, we are still able to make some guidance and help the markets with. So that's the real change that I'm seeing.
After reaching that target of taking Happiest Minds public, are there any lessons that you've learned on any front because of this pivot in the company's journey?
Plenty of lessons, actually. We were the first IPO in the digital world. When I said digital world, working from home, we delivered this IPO.
September 2020, right?
That's right. It was the peak of COVID, and all of us were working from home. The naysayers at that point in time saying the timing is not good was far more than people who said this is the right time. So if you look at it, we just pushed on and we said we will be the first IPO. Let's just focus on the task, because IPO is only start of the journey and there is a long way to go for a company. Let's just get over this and do it irrespective of the environment. And here I think Ashok's guidance was really handy, because as an iconic person, he told me that, Venkat, let's just focus on the task. We are building a great company. We are building a great place to work. Our financials are good. And this is a story that will resonate with the investors. And there are long-term investors who will see value in what we are doing. Let's just go forward. So I asked him, what about COVID? He says, today it's COVID, tomorrow you don't know what. Let's just push along. And that was I would say, the sanest advice I got. And I said, all hands on the deck, let's just go forward. In fact, we were the first IPO. And that's after which, the floodgates opened.
But today, we know of people having to push IPOs, hold back, resize what they offer. If you had to be going to the markets today, would you do it immediately? Would you hold on? What would you do? Would you take the same advice
again
Mr. Suta gave you?
I would go to the same advice, go back to the drawing desk. And on our strengths, I'm sure even today, a good IPO with a good story will sail through.
I'm going to end this by asking you to share some any thoughts you have for investors.
Looking into my own 7 quarters post-listing, we have had a great tailwind, wind beneath our wings. But I'm sure in the long term, we would also have blips. And you have to go through this. And that's the phase that every equity investor has to go through. And you have to make sure that you see value created in the long term.
And is there anything you want to say to the short-term investor?
I don't have much to say to the short-term investor, but for them, our quarterly results, I think, matter the most. And we are doing our best to make sure that we deliver to our best potential.
7 successive quarters, Venkat. That's wonderful to hear. I wish you and your team a lot of success and a lot of best wishes. Thank you very much for talking to us.
Thank you, Anuradha. And it was a pleasure being part of this program, Life After Listing.
Thank you.
Thank you very much.